Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin with Philippine inflation slowing down to 3.3% in August. Now, with the Consumer Price Index, or CPI, for the month pulling back from a 9-month high of 4.4% in July. Now, the latest data, the inflation print has settled within the 2 to 4% target set by the Philippine Central Bank. The easing inflation gives the Bangko Sentral ng Pilipinas room to continue with their monetary easing cycle and match any U.S. Federal Reserve rate cut. This comes after the Philippine Central Bank implemented its first rate cut in 4 years last month in August. Now we have this breaking news. The Office of the Ombudsman has slapped the Chairman and Chief Executive Officer of the Energy Regulatory Commission, Ser Dimalanta, with a 6-month suspension. In December, the National Association of Electricity Consumers for Reforms filed a case with the Ombudsman accusing Dimalanta of gross neglect of duty and for conduct prejudicial to the best interests of the service. Dimalanta was appointed to the ERC 2 years ago, succeeding Agnes de Vanadera. Her term is set to expire in 2029. Now, meanwhile, in the United States, President Joe Biden is poised to block Japanese firm Nippon Steel's acquisition of U.S. Steel, citing concerns over national security. This comes amid growing bipartisan political opposition to the $15 billion deal. U.S. Steel, however, warns that without this deal, there will be massive job cuts. The proposed deal has sparked a firestorm in the crucial swing state of Pennsylvania, where U.S. Steel and the steelworkers union that opposes the deal are both based. This merger would have created one of the world's biggest steel companies outside of China. The deal is facing tough resistance from politicians and from the U.S. Steelworkers Union, as both do not want to see the 123-year-old firm falling into foreign hands. Wall Street giant Goldman Sachs says a Democratic win in November will be better for the U.S. economy over the next 2 years. The investment bank says that Vice President Kamala Harris's plan to assist the middle class and small businesses will increase consumer spending and create tens of thousands of jobs monthly. Goldman Sachs adds that a Republican sweep or even a divided government led by Donald Trump will hurt economic output next year due to increased tariffs on imports and to tighter policies on immigration. Harris and Trump are locked in a tight race, with the Democrats squeezing out a narrow advantage in the national polls and in some battleground states. Still in the U.S., where the trade deficit widens sharply, fueled by a surge in imports in anticipation of higher tariffs on goods. The Commerce Department says that the trade gap increased by 7.9% to $78.8 billion U.S. dollars. That's compared to the $73 billion recorded in June. This comes amid plans by the Biden administration to impose steeper tariffs on the imports of Chinese electric vehicles, batteries, solar products, and other goods. There are also fears of even higher tariffs on Chinese imports should Republican candidate, former President Donald Trump, win the November elections. Over now to Germany, where the management of automotive giant Volkswagen goes head-to-head with workers angered by the company's plans to shut factories in their home country. Thousands of employees attended the firm's general meeting on Wednesday to vent out their frustration. They say that the firm's management has massively damaged their trust. They also question why Volkswagen is allegedly prioritizing spending on a €5 billion software partnership with a U.S. startup over protecting jobs in its home country. The automaker's finance chief, Arno Antlitz, explains that Europe's car market shrunk after the pandemic, with the car manufacturer facing a demand shortfall of about 500,000 cars. Antlitz admits that while he doesn't expect sales to recover, the Volkswagen brand needs to cut spending and adjust its output. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Over in Wall Street, U.S. stocks ended mixed following a soft jobs report that bolstered the case for an interest rate cut there. Now, the S&P 500 shed 0.2%, while the tech-heavy NASDAQ lost 0.3%. Now, the Dow Jones bucked the downtrend. It was only marginally higher, though, gaining just 0.1%. U.S. job openings, which gauge the demand for labor, fell more than expected in July, coming in at 7.7 million compared to the median estimate of 8.1 million. While this indicates that the labor market is losing steam, it may not be enough to push the Fed to cut interest rates by 50 basis points at their meeting this month. Now, trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at those initial figures. Right now, trading at the stock exchange, it's trading to the downside, marginally lower. PSE index is down by just 0.1% to 68.74. All shares index down as well, unchanged actually, just down by less than 0.1%. Now, the losses in the PSE index come on the back of selling in the financial sector and the property counters. They're down by 0.6% and by 0.3% respectively. Meanwhile, we are seeing marginal gains in the industrial, holding firm, services, and mining and oil counters. Now, to help us make sense of everything that's going on economically, especially with the latest inflation data, we have with us Ser Peña-Reyes. He is the director at the Ateneo Center for Economic Research and Development. Good morning, Ser. Thanks for being with us.
Good morning, Maiki, and to all of your viewers. Thank you for having me.
Yeah, we're good to have you on this gloomy day where we've got great news. Looks like inflation peaked in July at 4.4%. August CPI came in at 3.3%, below the expectations of many economists who had expectations ranging from 3.6 to 4.2% for the period. What do you think about this surprise to the upside, Ser?
Well, of course, it's welcome news. The median estimate actually was 3.7%. And this is, of course, something that the average person, or the average Filipino would welcome, because really inflation has been quite an issue, especially when you ask the ordinary person what is the main concern, how to go about living day to day with inflation. Okay, it doesn't mean to say that prices are going down. Okay, they're still going up, but this figure is good because it indicates a slowdown, in a deceleration in the increase of prices, which is of course something that the average person would appreciate.
So do you think that this, we just had July inflation at 4.4% and the decrease of by 1.1%. Do you think this downward trend, maybe too soon to tell, do you think we're in it for, we're in this downward trajectory over the medium term?
Well, there are projections. Even the central bank foresees that we will meet our 2 to 4% target range this year. Even our own estimates would point to that. So this deceleration would, based on our estimates, settle somewhere at 3.8, but the central bank would have something like 3.4% for the entire year. So there is a good indication that this will eventually settle down within the target range for this year, barring, of course, events that could derail us.
Okay, now the timing is pretty nice because the BSP is going to meet to discuss interest rates, and with inflation, August inflation at 3.3%, it gives the BSP room to continue with its monetary easing cycle, and it also gives us the latitude to match any rate cuts by the U.S. Federal Reserve. Now that said, interestingly, the BSP's monetary board is going to be meeting to discuss interest rates on September 12th. Now that's just 6 days before the Federal Open Market Committee meets in the United States on September 17 to 18 to talk about interest rates and to decide on that as well. Projections are for them to start cutting rates. Do you think that the BSP has, do you think that they're going to really cut rates by much, given inflation at 3.3% in August? Okay. I think we may have lost our Zoom connection with Ser. We'll try to get him back later. In the meantime, we're going to take a quick look at the figures at the PSE. Right now, the market is still down marginally, down by 0.1% to 68.74. All shares index unchanged at 37.28. The selling is on the back of the financials and property counters, while the industrial, holding firm, services, and mining and oil counters are bucking that downtrend. Now we're going to be taking a quick break. Basis Points will be right back. All right, welcome back. We now have with us Ser Peña-Reyes, the director at the Ateneo Center for Economic Research and Development. We lost you for a while, Ser, but we're glad to have you back with us. Okay.
Yeah, internet's quite spotty right now.
Okay, of course, because of the weather, I can imagine. You know, continuing our discussion on August CPI, which was just released, it came in at 3.3%, lower than the 4.4% the month prior in July. Interesting thing I wanted to point out, in 2023, for the full year, inflation came in at 6%, whereas GDP came in at 5.6%. Just how precarious of a situation was this with inflation outpacing GDP, and how does it look like now that inflation came in at 3.3% in August? Looks like GDP is going to be higher than inflation this year around.
Well, of course, it's going to be when inflation outpaces your GDP. That's not something good, obviously, because whatever gains you had in terms of income growth would be negated by inflation. So, meaning to say, last year we failed to meet our targets both for GDP and inflation. We weren't able to meet the GDP target, and we overshot inflation. And that spells, of course, something not good for the ordinary person. Okay, but for this year, there is an indication that we will be able to meet our GDP growth target. That's 6 to 7%. So we are projecting something percent.
That's right. For 2024, things are looking
up. Yeah, and for inflation, yes, as I mentioned, we're also projected to meet the target.
Mm-hmm.
In your 2 to 3%.
In your own words, Ser.
2 to 4.
Yeah, in your own words, can you talk to us about how this economic landscape is shaping up? We're entering a monetary easing cycle. Inflation is well within the government's expectations. GDP growth is robust. The government expects that to come in at 6.7%. Can you describe this situation for us? How does it look from your perspective? Okay, I think we lost him again.
Well,
there he is.
I'd like to think that things are looking up. There's optimism somewhat, but of course we'll have to still be cautious and temper our expectations, because there are also external events that, like, let's say in the Middle East and in Ukraine. So geopolitical risks, but barring those things, I think we will be on our way to meeting our targets for this year.
All right, thank you for your time this morning, Ser Percival Peña-Reyes. Now, the director at the Ateneo Center for Economic Research and Development. Now, in other news, Tycoon Manny Pangalinan's Meralco cements control over renewable energy firm SP New Energy Corporation. This after Meralco's unit, Meralco PowerGen, acquires an additional 11.6% stake in SP New Energy for 7.5 billion pesos from Solar Philippines of Leandro Leviste. This increases Meralco's share in the solar farm developer to 50.5%, a controlling stake. Solar Philippines still owns 29.4% of SP New Energy. SP New Energy is the developer of a 200 billion peso solar park straddling Nueva Ecija and Bulacan, which is considered to be one of the world's largest single-site solar facilities. Meralco took control over SP New Energy in December of 2023 after investing 15.9 billion pesos in the solar power firm. Now let's check on the business headlines in the major news websites. On Business World, veteran banker Jose Querubin is given the last seat of the Monetary Board, completing the Bangko Central's 7-member policy-making body. Before his appointment, Querubin served as the president and chief executive officer of the state-owned firm United Coconut Planters Bank from 2003 to 2007. Prior to this, he also held positions at Solid Bank and at Citibank. Now on Inquirer, the Department of Energy may initiate talks with the National Power Corporation or the NPC to test the viability of increasing the biodiesel blend for fuel used in power generation. The Energy Department plans to use the NPC facilities to test the feasibility of using the 55% biofuel blend for power plants to reduce our reliance on fuel imports and to reduce carbon emissions. The Energy Department currently mandates a 2% cocoa methyl ester blend for diesel. And on the Philippine Star, the Gokongwei family's Robinson's Retail Holdings is expanding its hard discount store OSave with the opening of an average of 200 stores annually. And that's it for Basis Points. I'm Maiki Oreta. Stay tuned tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.